On this episode of It's Deeper Than Code, we're diving into the mind of Kenneth Franklin, aka Joe Cool Burr, a trader who approaches the markets with the mindset of a philosopher. Joe shares how trading is not just about strategy, it's about rewiring your brain, mastering your emotions, and understanding the deeper principles of life that shape your success. From overcoming the pitfalls of chasing signals to building a mindset that thrives in chaos, Joe opens up about his personal journey, his biggest trading losses, and the wisdom he's gained from the charts. If you're serious about leveling up your trading game and developing the mental toughness of a true trader warrior, this episode is for you. Tune in and discover why Joe Cool Burr's approach is revolutionizing the way traders think. 11 hosted by Big Poppa Code with co-host Chrissy Todd, recorded live at Pod Central in Stockbridge, Georgia. This is season 4 of It's Deeper Than Code, and this is Joe Cool Burr.
Yeah. All right, Joe. So you talk about trade brain like it's a muscle. What was your personal turning point in rewiring your trade brain?
Well, it just comes from repetition, and I come from sports, so
Mm-hmm.
you consistently have to practice, you consistently have to put in the work, and then eventually muscle memory takes over.
Mm-hmm.
So you get a feel for it, and you get to do what you want off of instinct, but essentially you have to nurture what you're trying to produce.
Okay, and tell me just like your background in general, because I know you have the background in sports and fitness and also personal training and stuff like that. Can you just let me know a little bit about that, like about your story, and then how that kind of connects to the finance realm and stuff like that you're into as well with Wealth Fund?
Well, my parents were in the military, so the whole be all you can be type shit, pretty much applied that everywhere I moved.
Mm-hmm.
You always have to reinvent yourself. So I just took on the challenge, just keep on going and apply the same principles to sports, to academics, to basically whatever I put my mind to.
Mm-hmm.
Eventually you get real good at what you're doing, and then you develop the habit, you develop the instinct, you develop the skill, and then it becomes second nature.
Okay.
So I kind of consistently try to raise the bar.
Got you. So if there's the biggest thing that you want individuals to understand about your brand, about what you want to deliver, as part of your brand, what is that number one biggest thing?
Dream big and be ready to put in the work. Because a lot of people are looking for shortcuts. If you're trying to be elite at any level, there are no shortcuts besides actually putting in the work. So besides doing that, lead with your passion.
Mm-hmm.
If you do something that you're passionate about and you're having fun, the hard work doesn't seem like hard work. Therefore, you get to push through that threshold and elevate to higher levels.
Mm-hmm. Got you.
Well, I seen you posted everything is easy. What do you mean by that? That's a bold belief. Where did that come from?
Well, we speak in English right now, right? It's pretty easy, right?
To some.
To some it is, to some it ain't. But for the most who it is, the ones who it's the best for, they become the great speakers and thought leaders. And that's just them taking it to the next level. But for the most part, you put in the work and you do it consistently and it becomes a habit, it becomes easy. So the only way it's hard is if you make it hard.
So it's like a mindset thing, because if you make it hard, you make it difficult, then it's like you're putting like a unnecessary burden on yourself by doing that. Okay. So it's like kind of like removing that what's the word I'm looking for? Removing that burden off yourself. You know what I'm saying? Cool. So, okay. This is for the, what's the word? Like this is for like the thing we're trying to make go a little bit viral or something like that you could use, right? So listen to this one. All right. So what's your biggest trading L that you've ever had, and what did you learn from it?
Okay, I lost 20K, but That was just
You said
ego.
that so smooth. Like, yeah, I lost 20K, no big deal.
It was ego.
Mm-hmm.
When you do something so well up to a certain point, you try to push the threshold, and sometimes you think that the rules don't apply.
Mm-hmm.
They always apply. So it ain't nothing to get popped on your hand and say, nah, you got to lock back in.
Mm-hmm.
Sometimes you have to take a big L to understand that. But other than that, once you know what you can do and what you can't do, stick to what you can do.
Mm-hmm. And that's like that mindset of, because normally when people get like a big L, sometimes it's like you followed your strategy to the T and it just didn't work at that point, right? Because no strategy works 100% of the time. It's always going to be a loss or a gain. A lot of time when you get a big L, it's because you didn't follow your own rules. So you said it was ego. Was it like you had your own rule set and then you violated those rules, or did the things just go against you in that time? Like what? Like was it a futures trade, or was it options, or what was it?
I've lost big in futures and options, but this was an options trade.
Okay.
But even with that, that's a law of probability.
Mm-hmm.
It doesn't work all the time, but you have to know your numbers in order to know when it's going to work.
Mm-hmm.
So then as it works, you know where your risk is. But
Mm-hmm.
besides that, you got to treat it for what it is.
Got you. All right. Another engagement pulling question. So here's the so let me ask you this, right? A lot of times one of the negatives people will say about trading or investing or, in general, is that they feel like it's kind of like gambling, right? What would be your retort to that?
It is gambling. You drive on a highway,
Mm-hmm.
that shit's gambling. Everything you do involves risk. But the
Mm-hmm.
more acclimated and the more comfortable you get with what you do, you mitigate that risk by developing habits and skills.
Mm-hmm.
Sometimes it's protocols.
Mm-hmm.
Different people with different jobs or industries. You have things that you should do and things that you shouldn't do, things that you can do, and things that you can't do. Typically, those are going to be within the protocol.
Mm-hmm.
So that protocol is to mitigate risk. And it's gambling up until a certain point, but once you take out a certain amount of risk, it becomes systems and operations. So
Got you. Cool. And so your stance, you feel like it is gambling, but you can mitigate some of the risk by adding knowledge, systems, SOPs, that sort of thing, right?
yeah, even the top professional gamblers in the world, since we're talking about gambling, they have systems.
Mm-hmm.
They have strategies.
Mm-hmm.
They have things to do when certain situations present themselves.
Mm-hmm.
Same thing in sports. You run certain plays for certain situations,
Mm-hmm.
and you run other plays for other situations.
You speaking her language now. That's her.
That's my bag for sure. Definitely my bag.
She's top tier sports gambler.
Mm-hmm. 7 minutes. Anyway, I can't wait. What's your daily ritual or practice to stay emotionally centered while trading?
Have a plan, but other than having a plan, it's I'm big into meditation, visualization, prayer, breath work, but just mentally rehearsing how it's going to be, so when it actually happens, it's just natural.
Okay.
Cool. So right now, we know, like, on the social media standpoint, there's like a sea of noise, right? Where there's noise essentially everywhere you turn. And there's always somebody screaming from the rooftops that they know something or they don't know something, etc. Really more saying that they know stuff. And me and you both know that most of them are lying, right? What is your vision for making, because you're very much like the straight to the point. I know what I know. I'm clear. I don't bullshit. I just tell it like it is. And that's why, you know, the people that like to get information from you like to get information from you. So how do you use that personality to stand out in like the sea of everybody like banging on their chest saying I'm the greatest of all time, I have nothing to show for it?
Well, most people are losers. If you look at like the law of numbers, majority of people are losers, or we'll say followers. Most people are followers. Followers look towards leaders. So there's more followers than leaders. Out of the leaders, there's fewer pioneers. So the leaders look towards the pioneers. So the people who beat on their chest and act like they know what they know, they might only know that little bit. And they're going to shoot it to the moon and act like they know everything when they only know this thing. But I try to look at things from first principles. I like to break the system down, break the machine down, and build it all the way up so I can see what works, what doesn't work. When does this work? When does this not work? And like I said, I'm a straight shooter. I'm just going to tell motherfuckers straight up. I don't give a fuck how they feel. It is what it is. Like, since we was talking about sports, you can either make the shot or you can't make the shot. If you can make the shot, you can make from there. You can't make from there. Motherfuckers, shoot over there. Don't shoot over there. And you got to know what you're working with. Outside of that, you want to develop the biggest bag that you got. So you want to be able to make shots from everywhere. But then even with that, you want to know what your C setups are, your B setups are, and your A setups are. So
can you break that down a little bit more?
Well, let's call C setups like your layups. You know, you can always hit a layup if you get close enough. Outside of that, B setups, let's say it's like mid-range. Mid-range shots, you can shoot them anywhere on the floor as long as they're within the arc. Now, your A's is going to be your threes. Might be a little bit more difficult, but once you know you're in your bag, you can shoot your three. But sometimes you got to warm up before you get there, or sometimes you just come out straight shoot. All in all, you got to know what your bag is, what you can work with. And even though we're talking about offense, it goes in the same thing with defense too. Sometimes you have to play defense before you can get into your offensive bag. Sometimes you have to warm up on your offensive bag before you can leverage your defensive bag. But since we're talking about trading in the markets, as you know, you can make money going up, you can make money going down. If you're sophisticated, you can do spreads and catch it on both sides, hedge, or being a market maker. You can essentially provide liquidity to the market, let other people dictate how the market's going to go, and you can react based off of that.
Nice. So why do you think so many people fail at trading in general? Why do you think that is?
Because they are fucking losers.
What do you, and elaborate on that?
If you're a winner, you're going to do what you can to win. If you're not a winner, you're going to look for some excuses till you find the best excuse to pacify yourself. Outside of that, you're going to put in the work and you're going to strengthen your weaknesses. You're going to strengthen your strengths. You're going to strengthen your weaknesses. Outside of that, you got to play ball. You got to play the game.
Well, actually, no. How does someone know they're ready to trade real money? Like their real money?
Practice makes perfect. So what you want to do is you want to mitigate your risk. So you know how to drive, right? How was you ready to drive on the interstate versus on the freeway?
Me? Like me? Amazing. Even better.
You know what I'm saying? Like, how did you...
Like rate? Wait, how do I rate it?
No. How did you get comfortable with driving before you could drive like on the highway or the interstate when it was more dangerous?
I'm a bad person to ask this to. Let's ask him. Because I went straight on there.
You went straight on there?
I was like, what? I learned
She
on
went
the
right
freeway.
to she went right to 8 setups.
I ain't learned like it that way. I was straight on the freeway.
Well, I was trash. I'm not gonna lie.
Okay.
So I mean, I had to drive on the street because I'm from New York and not everybody drives. So I was already kind of old as it was to begin with. I'm not even gonna lie. I was like 19, and I only was getting a car because I was like, this is gonna be my differentiator in my pursuit of the you know what. So you know what I'm saying? It's gonna be my differentiator. Oh, you getting on the bus with what? With who? You could be in my car. You could be in my car. But anyway, but so at the end of the day, I drove on the main street, got comfortable on the main street, and then like 6 months later, I finally was like, all right, I'm gonna go from exit 20 to 21, which I could see 21, and I'm gonna make sure I could get across there. So can I merge in, not die, get off? And then I did that for a while, and then I was like, all right, we're gonna go from Brooklyn to Queens. And I'm like, all right, so that means I gotta get from exit 11, and Queens starts at exit 17. So I had to get from exit 11 to exit 17, right? From Flatlands to Queens. Because I live in Queens. I was like, all right. So I drove on the side streets to get over there. I was like, all right, we're gonna make it back. I'm gonna hop on, we're gonna go these 7 exits and make it over here. And I did that. And then once I felt comfortable doing that, I was like, I could drive anywhere. And I was going on that. I finally went on a bridge. You know, you can't get nowhere. I can't only get from Queens to Brooklyn if I can't get on a bridge because I'm surrounded by islands and all that. So I had to do that. So I had to hop on, and I was like, all right, we're gonna take the Brooklyn Bridge, and I'm gonna get over here to Manhattan. And then I got to Manhattan, and I was like, and I felt like I was getting an accident every 3 seconds. Like, nope, we need to get back over on this side because Manhattan's a little bit too much. Just too much. People were honking at me and all that. Eventually, able to go over there, take the West Side Highway, move over to the FDR eventually. Then I went to the Bronx, and I didn't go to the Bronx. I was real comfortable because the Bronx, they be wilding. I don't know what they be doing over there. And also I got to worry about somebody going to try to take my car. You know what I'm saying? Back in that time, at least, because I don't know them over there. So also it's like, yeah, that was a longer answer than you asked. But that's how I learned. It was traumatic. That's why I know the details.
Well, for you, did you ever have to learn how to do something with high difficulty where you had to start off on the basics and then eventually like get to something like more advanced? Or you just always been advanced?
No. I guess. I don't know.
Just always been advanced.
Yeah, I've just always been advanced. I don't really know.
So.
Can't think of anything.
Okay.
You was nice at makeup from day one?
Hell yeah.
Just a prodigy.
What you mean? Yeah, you know what it is. I can't think of anything. So let's use your example though. You started
I started trash.
On the side streets. And but then again, he's still not a good driver.
I'm an excellent driver who never gets in accidents. It gets everybody where they're supposed to from point A to point B all the time.
Maybe a day later.
I do drive slow though. I do drive slow. I can't get around that.
But to sum up your question, you want to get familiar with what's going on before you add on the risk so that, okay, let's say the situation is set up. Do it so many times that by the time you want to risk real money, you should be comfortable with it.
Mm-hmm.
Mm-hmm.
Or, jump out the gate, use real money, be ready to deal with all those real emotions and be ready to face yourself and check yourself as you need to get better.
Cool. I feel like my example is real ready. Not intentional, but you know. Oh man.
What advice would you give yourself like your first year of trading if you could go back in time?
Just start from the basics. So when it comes to trading, you have candlesticks, but a lot of people look at like indicators or something like that. You ever look at the chart and, it goes up, it goes down. Typically, people say like, hey, they never taught us this in school. But in school, they taught you rise over run. And they said A squared plus B squared equals C squared. So all of that is actually on the chart. But if you apply it, you can look at it through the candlesticks. So a lot of people look for shortcuts. And you look at those indicators. Those shortcuts could be explained as like mean, median, and mode. So mean is the middle. The average. Median is actually the middle. And then mode is like the most often. So
Mhm.
the chart is full of patterns, and because the patterns kind of play out a certain way, you can look at it like a certain name of a pattern, like bull flag or head and shoulders or this, that, and the fourth. All that means is price action is producing a rate enough to present a pattern so that you can take advantage of it. So if you can read the candlesticks and then you can read the pattern, and then if you want to, you can add on those indicators as additional confluence. It adds to the story. So it adds to the conviction for you to take that trade. But
Mhm.
once you know what you're looking at and you know the risk assigned to it, you can typically take that trade or take that bet because you know what you're going to get out of it.
Would you say trading's for everyone?
I would say that's for everyone, but everyone learns differently. So everybody has to find their way to learn how to trade. But typically it's for everyone since all it is a cycle. It's a market cycle. So all you're doing is taking advantage of the market cycle. And a easy way that I like to simplify it for people is take the season that we're in right now. Right now we're in summer.
Mhm.
What type of clothes sell for the summer?
Bikini, shorts.
Now, if you're a consumer, you would buy it during that time. But if you're an investor, when would you buy that?
Winter of last year.
So that would be buy low, sell high. You buy it in the opposite season when the demand is low, and then you sell it when the demand is high. You just apply those to what you got going on, and you can pretty much take advantage of it. That's a spread, and it's also called arbitrage.
Mhm. The crazy thing is, I don't know why this is in my head just because of the finals are happening or whatever. That's like the same thing where it's like, if you were to bet that the Indiana Pacers were going to win the finals, it'd have been super cheap to do that in like October, right? To do a long-term bet on that. Like the odds were like crazy and nobody was thinking they were going to get here. If you bet that today, I mean, there's a 50-50 chance like you're not going to get the same return on that. But seeing I wish I would have bet that because I had a feeling. I'm not lying. I'm not BSing. I had a feeling once Halliburton won the in-season tournament, or like went crazy in-season tournament. I don't think they won. I think the Lakers won.
Yeah.
Right. But when he was going crazy in-season tournament, I was like, yo, he kind of different. Like I feel like he get the right pieces. I feel like I had in my head they're gonna make a serious run, and I should have just put like. You could have put like a couple hundred.
Man, you could have put $100 on there and you could have won. So, especially once he got voted most overrated, that's when you should have known. Oh, he about to snap.
Exactly.
He's probably snapping as we speak, God willing.
But it's the same thing, because the reason why I bring up the sports is because, like, in your book and stuff like that, you talk about, like, when you're building your financial future and stuff like that, you talk about, like, building, like, a 2K player or whatever, right? And you're building up your stats and doing different things like that. And when you're looking at companies to invest in long term, even in like the, when you're investing, the same way that you're going to look at like the attributes of like, let's say somebody like Shea Gilgeous-Alexander, right? You're going to look at how often he flops. No, I'm joking. He be flopping. We know he be flopping, but you're going to look at all of his stats and kind of guess like, okay, am I going to take the over based on, the defense of who's going to be guarding him? How often he gets. Let's say it's a bet on, is he going to get over 10 assists, which he almost never does anyway. But let's say that's what it is. He's going to get over 10 assists based on what he's been doing, based on what he's not been doing, based on like his past performance, the pattern that you've noticed, and also how he shows up in certain circumstances, like when it's, when, let's say, the Fed is about to make an announcement, right? That you could look at that like a game 7, right? Like it's a different atmosphere than when you're deciding if SPY is going to go up or down, because you know that like, hey, the Fed's going to make this announcement, or this happened in news. Trump just did XYZ. This just happened. Like there's different circumstances around the game. And if you look at the game as like every game is like, a trading session, right? You can kind of think about that way. That's like the main thing. One of the things I kind of got from your material, right? So could you elaborate on that? Well, I probably did explain it pretty good, but you elaborate on that?
You did, but piggybacking off of the initial point of that, where you were saying if you would have bet on Indiana at the beginning of the season or preseason compared to now, essentially that's what you're doing when you invest in leaps.
Mm-hmm.
So first off, an investment is a trade. It's just long term.
Mm-hmm.
Because if you hold an investment for a long term, eventually you're going to sell it. And then once you sell it, it becomes a trade.
Mm-hmm.
But anything that's less than a year is considered short term,
Mm-hmm.
short term capital gains. So based off of that, you can apply that same logic from the sports betting with the preseason to the finals now to saying your odds were going to be different at the beginning of the season versus now where it's like a 50-50.
Mm-hmm.
When you do leap options, you're buying 1 to 2 years out and you're essentially doing the same thing. What's the price of this stock right now? Company, ETF, whatever it is. What's the price of it right now? And by the time this contract expires, am I going to be in the money, at the money, or out the money?
Mm-hmm.
And the more time that you buy, the more expensive the contract is going to be. But the closer that it gets, the more in the money you are, the more money you make.
Could you explain for everybody what it means when we say in the money versus out of the money?
So if you buy a contract for something to be $5,
Mm-hmm.
and at the time that you buy it, it's $5, it's at the money.
Mm-hmm.
But if the price is, let's say, $7.50, but you buy the contract to be $5, then you're already in the money.
Mm-hmm.
But if you buy it to be $10 and it's $7.50, you are out of the money, meaning that it has to perform to get to $10 for you to be at the money, and then go beyond $10 for you to be in the money.
Mm-hmm. Got you. Cool. Let me ask you this: with the name Wealth's Fun, right? Where did you come up with that name, and what's the ethos behind it? Like, why did you choose that name for your business?
Just studying money. People looking at money to gain wealth.
Mm-hmm.
When we all have heard that health is wealth. And when you think about health is wealth, you think of habits. What are the healthy habits that you need to do to become healthy in terms to be wealthy? Same thing with money and finance. You still have to have good habits, a good steward of your money,
Mm-hmm.
and you still have to do the things to not only get the money, but to keep the money, and then learn how to multiply the money so that, you can be more and more wealthy. In order to take the stigma away from it, just turn into a game. Just have fun. Most people are competitive. If you set your rules so that you always win, then all you have to do is follow your rules and compete at the high level, and then continue to win. Most people think winning is fun. So you put it together, well, it's fun.
Got you. And the tagline, "The game is the game." Could you elaborate on that?
It is what it is. The game is the game. You gonna excel or you're not. You're either the best or somebody's better than you. Sure, people can have off games. You can have an off game. Somebody else can have an off game, but it is what it is. Every day you got to show up. Every day you got to compete. Most people think that once you make a lot of money, then that's it. That's game. But you still got to hold on to that money. You still got to figure out how to make that money make money. You still got to pay taxes. There's the game within the game. So just understand that the game is the game and put in your best foot forward.
Cool. So online in like the teaching space, right? There's like a big debate, right, between whether it's more important to teach mindset first or it's more important to teach skills first. Where do you stand on that?
I'm right in the middle, but the way that I teach is I try to piggyback off of somebody's expertise. So because I've done a lot, I'm able to relate to people in different ways. So whatever somebody's initial skill set or something that they've excelled at, I'm able to put it in those terms, but at the same time, instill the skill work that they would need to do to excel. So starts off as mindset, goes to skill, and just pings back and forth until you get that evolution.
Got you. Okay. Question. Let's say, right, I've got, let's say, you were going to teach somebody brand new. Let's say they have a background in sports betting. That's pretty much what they've done, but they're really, really interested in trading, right? They resonate with the analogies of games and things of that nature, and they want to dive right in to trading, like professionally, or just in general. Let's not say the word professional just yet, but they want to jump in. They want to get started immediately. What would the first thing you tell that person be? What's that first action that they should take to get acclimated and start trading consistently?
Well, if they're coming from sports betting, they should already know the only risk which you can afford to lose.
Mm-hmm.
But outside of that, I'd say get a demo account and get your reps in.
Mm-hmm. So with a demo account, then they'd be trading paper money. Is there any amount of like paper money that you think that they should be trading with? Because I know some people say, oh, you got to use $100,000 demo account. You got to use $50,000 demo account. Like there's actually like people that have like specific like reasons for that or whatever. Do you think all that's just BS and people just trying to sound smart?
It's numbers on the screen.
Exactly, right? So it's like, it doesn't really matter how much is in there, just get in there and just start making a trade.
It's really the mechanics of it. Once you can understand the mechanics, you leverage the mechanics, and then you can put numbers behind it.
Mm-hmm.
Once you put numbers behind it, it's just leverage. So if you know that you work in a job and you can only afford $100, simulate the $100 until you can figure it out. Once you can figure it out, amp it up. Once you're able to save that amount of money, first off, you shouldn't be doing it without having an emergency fund. But once you can risk what you can afford to lose, keep the numbers realistic until you can turn it into actual profit.
Got you. And I agree with that, 'cause that's the way I feel too. 'Cause it's like, why would you tell somebody to paper trade 100K? They're never going to trade 100K, and they're going to get 100K habits. And certain things that we know how options work. Certain things you can do if you got 20K that you can't do if you got 200, right? Different ways that you can add size and cut and do different things. So it's like, why even tell them to do that? So you're saying that what they should paper trade is what they're really going to do. They should basically fight how they train, like they say in the military, right?
Exactly. Plus, you play a video game. Rare instances, you might start off at the top level, but if that's the case, then eventually in the game, it's going to knock you down to the lowest level, and you have to build yourself back up.
Mm-hmm.
So you should take that same mentality, apply it to any skill that you do. Any skill is a discipline. So the more that you do it, the more that you hone in on it, you unlock gems that pay forward and serve you as you excel and elevate to the higher levels. So you should essentially want to do that same thing with the demo account until you get so good that it wouldn't make sense not to use real money.
Mm-hmm. Got you. Do you have any like benchmarks on how much money somebody should have to get started? You think they should get started with whatever they have?
Do with what they have, with what they can. So the sooner you get started, the sooner the compound effect happens. That's why you should treat the demo account like real money until you're ready to risk real money. Because if you put that same intention into what you're doing, it's just going to compound. So say like somebody from another country wants to learn English. Well, they have so many programs and systems that simulate conversations to the point where they can practice that way until they get into a real conversation.
Mm-hmm.
It doesn't take away that skill set just because they didn't go back and forth with a real person. But once they're confident enough to carry on a conversation and understand it, then they can apply it to real life situations.
Got you. No, we didn't ask that. So in your book, you said making money is action and keeping money is behavior. Can you explain that distinction?
Well, let's take it back outside of trading.
Mm-hmm.
In order to trade with real money, you gotta work for real money. So take like a job or a skill or something like that. That takes action.
Mm-hmm.
But then in order to make the money make money, you have to have a certain behavior. So you have to hold on to the money long enough to find a suitable asset or something to put it in.
Mm-hmm.
And then you have to know enough about that to make the money make money or make the money make babies.
Mm-hmm.
So that doesn't come from, I mean, it can come from just pushing a button once you get your skill set up, but essentially you have to do things in a habitual order in order to have the light bulb moment to know this is a viable risk.
Got you. And so if you were to like sum up your wealth philosophy for someone, right? In just like a snippet, like somebody who has never heard of you before, never worked with you before, how would you describe it? Like what makes you with your philosophy?
Well, I like to use the analogy of a watermelon, right? Take a watermelon seed. If you're able to plant that watermelon seed and nurture it and grow it to a full watermelon, now you have hundreds of seeds.
Mm-hmm.
So you've gone through the process of planting and then growing it. So then once you have your watermelon, you cut it up, eat it, do whatever you want. You take those seeds. Now you can plant those seeds and create more watermelons.
Mm-hmm.
And the better that you get at that process, the more that it will reap.
Mm-hmm.
Mm-hmm.
So the better you get at the process, the more that you understand what you have, what it's going into, how to nurture it, and how to maintain and grow it. The process is the process. You can't skip the process. But once you know the process, you can have as much as you want.
Got you. That's dope. So you because that's true. You plant one seed, only one tiny seed, and you grow fruit, right? That fruit has dozens, hundreds of seeds in it, depending on the fruit. Watermelon, for example, has a bunch of seeds. You take that fruit, you use it, you do something with it, but then that fruit also has within it the seed has a bunch of seeds to make a whole bunch more. And repeat that process. You go from 1 to 20, 20 to 300 to 300 to 4 to 4,500 or whatever the rate of return is. But you're compounding that, just like you said, the compound effect. You're doing it over and over and over and over, and you're continuing to grow. Yeah, that's deep.
And the riches are in the niches. So the more that you understand the niche, the more that you can get from it.
Mm-hmm.
But you got to be able to be married to the boring work.
Mm-hmm.
Once you're married to the boring work, the process, you basically are able to see things before other people see it.
Mm-hmm.
And because that, you actually know the value. You know the intrinsic value before everybody else knows the extrinsic value.
Mm-hmm.
And then just rinse and repeat.
Bet. So, a couple more questions. How do you balance logic, intuition, and risk in your trades? Coming back to trading, how do you balance that? Like, do you like, how do you feel about intuition? Do you believe in that? So logic, intuition, and risk.
Yeah, so it's all intuition. It's just senses. But when it comes down to logic, that would be your fundamental and technical analysis.
Mm-hmm.
Once you can break it down fundamentally, and then you're able to apply the technical analysis to it, now you have to look within and see, okay, does this look right? You're doing like self-check.
Mm-hmm.
And with intuition, you have your main brain, you have how does this feel within my heart, and then you have the gut instinct. Once you elaborate between those and everything checks out, like confluence or the stars align, then you have more conviction into doing what you're doing. So you done already did it right on paper, and then you just self-check. And then besides that, the last component is the risk. Only risk what you're willing to lose, but if you've already checked that off, you're comfortable. You're able to sleep at night.
Cool. Okay, so here's what I want to do real quick right now. Chrissy, do question 1 and 2. I want to rerun those because you weren't comfortable yet when we asked it originally. So I want to re-ask them.
Okay. You talk about trade brain like it's a muscle. What was your turning point in rewriting yours? Is that rewiring? Hold on, I'm going to ask it again. You talk about trade brain like it's a muscle. What was your personal turning point in rewiring yours?
It just came from constant repetition and going through my process. You say like, what is it? Backtesting, forward testing, looking at my notes and everything like that. Just having a good insight and, reviewing how I felt about things and applying it to my system.
Okay.
Cool. And do number 2 too?
Mm-hmm. Most traders lose money chasing signals. You teach strategy. What's the real mindset of a winning trader?
Just follow your plan. Focus on the candlesticks, focus on the patterns, focus on what's presented to you. So if you're going to take a trade, you should already know what's going on with that trade.
Mm-hmm.
You should know the fundamentals, the technicals, and then you should already understand what should be the result from that trade.
Okay.
Cool. And then we're going to cut this into, I want you to retell me the ABC analogy of the you know what I'm talking about, like what you said earlier. I want you to just re-say it again. I want you to go straight through without me stopping you in between.
Which one?
When you talked about you have your layups, you have your mid range, you have your 3-pointers. I want you to say that. Say. Go run through that one more time. I want you to say it through without me interrupting you at all. This way I have it straight through. So just pretend like you didn't say it before and just say that, and then that's it.
Okay, so when you're assessing risk or when you're looking for shots, you want to understand what kind of shot is this or what kind of setup is this? Is this an A setup? Is this a B setup or is this a C setup? So your C setups are going to be your layups. You can hit them at any time. You know that you can use them to get in rhythm. Your B setups are going to be your mid-range shots. So you have your spots where you can shoot your mid-range shots, or you can get good and comfortable enough where you can hit it anywhere within the arc. And then your A setups are going to be your 3-point shots, or if you're special, 4-point plays. But essentially, those are going to be your bread and butter, the high skill, high conviction ones, but that don't come too often. But if you're locked in, you can shoot those A+ setups, those 3-point shots. But essentially, you want to have your bag. You want to have your bag for your layups, your bag for your mid-range, and your bag for your 3-point shots, which is going to be your C setups, your B setups, and your A setups.
Bet. Cool. And one last question. So what's the next evolution of Welt's Fun and your brand? What is that? What does that evolution look like over the next 1 to 5 years?
Well, I'm all about breaking things down to the first principles, fundamentals, and the basics, and then building things up. So I like to break systems down and build them up. With that, most people want to gamble when it comes to trading, but once you get out of that, you understand that it's systems and protocols.
Mm-hmm.
So then you have an expectation of year over year, month over month, how much you're going to make through trades just based off of habit. Essentially, the goal is to have everybody become a sovereign individual with, if they want to quit their job, they can, but you shouldn't quit your job. You should work as much as you can to get as much capital as you can to multiply that capital until you can build your retirement fund so that you can live off of your assets. But essentially, it's break down money, demystify money, and then understand the systems that govern money so that you can understand what an asset is, what a liability is, and understand how the rich create money from thin air, leverage debt, buy assets, collateralize, and continue the cycle going.
Perfect. Awesome. Well, cool. Well, that's everything there. So yeah, I appreciate you coming down. And where can they find you at?
You can find me on social media, Joe Cool Burr. Wealth Fund coming soon.
Cool. Perfect. Wealthfund.com. Perfect. And we'll put it down here at the bottom so you can click on it in the description. And peace. Appreciate y'all coming out and appreciate you being here.
Man, they call me Mr. CTO. I'm the one that you should call when you're learning code. Success follow me around if you didn't know. From the bottom, so the top, the only way to go. Yeah, man, they call me Mr. CTO. I'm the one that you should call when you're learning code. Success follow me around if you didn't know. From the bottom, so the top, the only way to go. Got in this game from a humble beginning, but now we winning. Came up